Hello and welcome to MacroLens. In just 3 years, foreign investment into China has collapsed from over $344 billion in 2021 to just $19 billion in 2020. That's the lowest in 3 decades. Some quarters even saw net outflows, meaning more money leaving the country than is coming in. So we will talk about what actually happened, why did it happen, how does it affect China, how does it affect the world economy, and what if a global recession hits. Last but not the least, we will also talk about what I personally think about this. So let's start. Foreign direct investment, or FDI, is the lifeblood of global integration. For decades, China was the world's magnet for foreign capital, but since 2021, inflows have plunged by more than 90%. So something changed in 2021, and we are going to investigate what it was. In 2023 and 2024, we saw something unprecedented: net outflows. For the first time in modern history, foreign companies pulled more money out of China than they put in. What is going on here? So why the sudden collapse? First, interest rates. In 2021, US rates were near zero. In 2024, the Fed had raised them to 5.5. Suddenly, US Treasuries offered a safe, high-yield investment, much more attractive than risky investments in China. Second, currency risk. The US dollar strengthened while the Chinese yen weakened. That means profits made in China shrank once converted back to dollars. Third, regulation and geopolitics, and you are all aware of this. Over the past few years, foreign firms have faced sudden crackdowns, national security reviews, and rising tensions between China and West, as we all know. Fourth, growth slowdown. China's economy is maturing. The property boom has ended. The debt is piling in and is becoming larger and larger. And industries like electric vehicles and semiconductors are facing overcapacity. Too much is being produced. And finally, diversification. Multinationals are hedging their bets. They're shifting factories to India, Vietnam, and Southeast Asia to reduce dependency on China. So what does this mean for China? Less foreign capital makes it harder to fund innovation and advanced tech and manufacturing. It also pressures the Chinese yen, forcing Beijing to tighten capital controls, making it difficult for money to move around. So without foreign inflows, China has to rely more on state stimulus and debt expansion. That leads to diminishing returns and risks of financial instability. Most importantly, losing FDI weakens Chinese connection to global supply chains. So now for decades, foreign firms brought not just money, but also know-how, technology, and global market access. If that pipeline dries up, Chinese long-term growth shrinks. So how does this affect the rest of the world? For global corporations, this means supply chains are rewiring. More investment is flowing into India, Vietnam, and Indonesia. For commodity markets, weaker Chinese demand means softer prices for oil, copper, and iron. That hits exports from Brazil to Australia. And for global growth, it means the world's second largest economy is no longer the engine it used to be. Investors and governments alike will have to adjust to a world where China contributes less to global expansion. But here is the big question. What if the world enters hard recession in 2025 or 2026? If that happens, the retreat from China could accelerate. Capital would rush back to US dollar and the US treasuries, starving emerging markets of funds. China might respond with massive stimulus. They've already done this, but the stimulus in this case will be even larger, or even bigger capital controls, where they are controlling how money is flowing. They could devalue the Chinese yen to support exports, but that risks financial contagion worldwide. So for global economy, it would mean even weaker trade flows, rising financial stress, and a higher chance of drawn-out downturn, meaning recession would potentially become a depression. How do I personally view this? Well, China has been in this extreme growth ever since the 90s. So they changed their policy in end of 80s, making economic institutions open for everybody. But the issue here is that China is not that open. Their political institutions are closed and exclusive. So for a nation to truly become successful and wealthy, my view is that the nation needs to be free and it needs to have free, inclusive institutions, both political and economic. And this is something that China is missing. So eventually, the growth would have to stop and they would stay stagnate. This is my opinion, and this is actually happening right now. So foreign investment is voting against China, whether this is just temporary or permanent shift in the global economy. However, whatever it is, it will reshape the next decade. If you found this breakdown useful, please like and subscribe. I will be digging deeper into the data behind the headlines. Thank you.